Hello everyone, this is Sir Abdullah and welcome to ACUK Online. Today I'll be going over Business Studies Paper 2 from October-November 2020. This is Data Response Paper 22. I'll be going over the first data response with you and I'll try to walk through all the questions that are mentioned and how to solve them. This is ASlevel Business Studies Paper 22, code 9609. This is the paper from October-November 2020 and I'll be going over the first data response and I will give you a guide through on how to tackle and attempt these questions. So first of all, what we'll do is we'll quickly go through this data and look at all the questions, and while we're doing that we'll try to underline and highlight all the important aspects that have been mentioned. So starting off, Energy Solutions. So ES is a private limited company is a public limited company in country X. The business was set up in 1980. For 25 years, most of ES revenues came from coal mining. So their main source of operations and main source of income is definitely coal mining. And although ES still owns many coal mines, the business now specializes in hydraulic fracturing, known as fracking. This is a process used to extract gas from underneath the ground. The government of country X encourages firms like ES to grow. The growth of ES has led to economies of scale and lower unit cost, so that's quite understandable. ES considers the effects of fracking on all the stakeholders of the business. Figure 1.1 is an extract from a recent newspaper article about fracking. So this article is basically the one given in the box. So fracking is not liked by everyone. On the positive side, it could produce enough gas to mean that country X can produce its own energy for the next 100 years. This is also likely to mean lower energy prices for both businesses and consumers. So basically, fracking is giving them good amount of energy at a lower price. However, people are not really liking it. Competing companies in the market have taken full advantage of fracking and are expecting to increase their revenue and profits substantially in the future. However, people who live near the fracking sites have reported many minor earthquakes. These have not damaged any buildings, but the price of houses in those areas has decreased significantly. Okay, so now we know why the people don't really like it. So there can be natural concerns regarding fracking, and they also feel that the prices of the real estate in that particular region has declined due to this business activity happening in that area. There has also been a concern that fracking could lead to pollution and loss of wildlife. Okay, so that's there too. Now moving on, despite the complaints from some external stakeholders, ES plans to increase the number of fracking sites in country X. So ES wants to further increase their fracking sites in country X. This will require ES to buy licenses from the government of country X. Each license costs 50 million and ES will require both internal and external sources of finance to fund this purchase. ES employs over 1,000 people. Every worker benefits from a profit sharing scheme as well as their basic pay. Now they have given us a profit sharing scheme data where they have given us profit in 2019, which was 12 million. Each director's share of profit is 0.25%. Each manager's share of profit is 0.1%. Each of the other employees' share of profit is 0.002%. Okay, now coming to the question, the first question is asking us to define the term revenue. So we all know revenue is simply the amount of money that the business is receiving from whatever sales that they're doing. So revenue can be calculated by multiplying your quantity sold with the selling price. So we'll simply define the term revenue over here. That is the income or the money that the business is receiving from selling its goods and services. Second question is asking explain the term unit cost. So unit cost is basically the average cost per unit. So whatever the business is paying in order to produce or make that one unit of good or service that they're selling. So in case of yes, as they're selling gas, so one unit of gas produced and whatever they're paying in order to achieve that, that is their unit cost. Now moving on to part B1, refer to table 1.1, calculate the difference in dollars received by each partner, each director and each manager from the profit sharing scheme. So they're asking you to calculate the difference in dollars. Now over here they had given us the profit sharing scheme. So we have the value of profit that was 12 million, and the profit sharing scheme for directors was that they will receive 0.25%. So this means that this 0.25% is of this 12 million, and the managers are getting a share of 0.1%. So again that 0.1% is also of that same 12 million. So now the question is simply asking us to calculate the difference in dollars received by each director and each manager. So what we have to do is we have to calculate the amount that the director is getting and the amount that the manager is getting, and then we'll simply subtract those two to find the difference. So first, if we need to see what the directors are getting, so we can simply do that by taking, so it was 12 million was the profit, so 12 million, and we multiply it by the percentage, that was 0.25%. Now remember this is 0.25%. So when you calculate this, your answer will be around 0.03 million. In other words, this is basically $30,000, right? So the amount that one director is getting is $30,000. Now the same thing we'll do for the managers. So managers are getting 0.1% of that 12 million. So in order to calculate the amount that the manager is receiving, so again we do the same thing, 12 million multiplied by 0.1%, and that will be 12,000 only, right? So this will give us 12,000. Now the question asks us for the difference, so we want to calculate the difference between these two values. So 30,000 minus 12,000 will give us 18,000. So that means that the difference between the salaries of the managers and the directors is of 18,000. So this is what the question asks. So simply we first calculate the amount of money received by the directors, then we calculated the amount of money received by the managers. We simply deduct the two to calculate the difference. It is very important that we read the question what they are exactly asking. Now over here they wanted us to calculate the difference. So the difference is $18,000. Now the next part is saying explain one disadvantage to ES of using a profit sharing scheme. Okay, now most of the time this the part 2 of your question B is connected to what you have calculated in your previous part. So they're asking us for a disadvantage. Now a disadvantage for a profit sharing scheme can easily be, that can be linked to what we have just looked over here, that sometimes employees may be dissatisfied with the amount of money that they're receiving, because they might feel that someone is getting more and someone is getting less, although they might be doing the same amount of work or in certain conditions even more amount of work. So because profit sharing scheme is based on a percentage, and like in our part A we could see that the directors are getting 30,000 and the managers are only getting 12,000. So definitely that can cause some dissatisfaction among the managers, because overall managers might be doing a lot more tasks than the directors, and they have a huge difference. So one disadvantage of using a profit sharing scheme can easily be that employees may be dissatisfied because they have different percentages, and based on those percentages the amount of money that they receive will be different. so that can cause some dissatisfaction. On the other hand, if we look at a general disadvantage for profit sharing scheme, so that can definitely be that there will be less profits available to be distributed as dividends, because when these profit sharing schemes are in place, so that will reduce the distributable profit for the shareholders, and shareholders may be dissatisfied because obviously they will be receiving less dividends. So that can also be another disadvantage for profit sharing scheme. Now moving on to part C. Part C is saying analyze one internal source of finance and one external source of finance that ES could use to purchase a fracking license. So one internal source of finance and one external source of finance. And what were they purchasing? This was a fracking license. Now students, you must always remember that when we are answering a question that is addressing sources of finance, and especially for paper 2, it is really important that we mention those sources of finance that are linked to the information that has been given to us in the data. Now, internal source of finance is the money that is generated internally from within the business. So, for example, using their retained profit, selling off any unused fixed assets. And external sources of finance is when the business is raising money from outside sources. So it is also important that we see what sort of purpose, what purpose they actually require this finance. So we're talking about a fracking license over here. Now this fracking license cost 50 million. So we know that this is a large amount, and in the very start they mentioned that ES is a public limited company and it has been operating for 25 years. So whenever we are talking about a public limited company, a major source of finance that comes to mind is selling of shares, right? So this company can definitely sell shares, and this comes under your external source of finance. So selling shares to new investors can be a source of external source of finance that they can use to uh, raise that amount of money that they need. Selling shares to existing shareholders can also be an option, but that can be considered as an internal source of finance. So suppose if they decide to sell some right issues, that means they're selling shares to their existing shareholders, that can be considered as a internal source of finance. Okay, so again, they just asked us for one, yeah, they asked us for one internal source of finance and one external source of finance. Now, I'll just mention few more that can be applicable over here. So they also mentioned that they're getting a profit of 12 million. So in order to make up that 50 million that they need, they can use a part of their retained earnings. However, that retained earning will definitely be not enough, because the profit that they're making is only 12 million, whereas they require 50 million. So external source of finance will be necessary. And because they are a public limited company, they can also go, and they have a good reputation in the market. They have been established for 25 years, so I'm sure that they can easily go and take out a bank loan, and the bank will be able to fund this license cost for them. But at the same time, a bank loan will come with added interest, that will be an additional cost, and obviously this bank loan is an external source of finance. So that can also be mentioned. And you can also talk about, they talked about that the government supports such businesses. The government is very supportive of them. So some sort of government funding and government grants can also be used. Again, that will be an external source of finance. So in simple words, the internal sources of finance that we can mention over here can be selling shares to existing shareholders in form of rights issue. Another internal source of finance can be utilizing their retained profits. Another source of finance internal can be if they want to sell off any of their existing assets that are unused. And under external sources of finance, we can easily mention that selling new shares to shareholders. And then we can also talk about obtaining a bank loan, and we can also talk about government funding. So now the question only asked us for one. So my advice is that this whole question is covering up 8 marks. What you can do is that for 4 marks you try to cover up the area where you're talking about the internal source of finance that they can use and why or how. And then for 4 marks you try to cover up the external source of finance. So suppose if I am talking about the internal source of finance and I mention that they want to use their retained earnings, so my simple paragraph can address things like that. One internal source of finance that ES can use is to use their retained earnings to fund the fracking license fee. However, the retained earning amount may not be completely sufficient to fund this amount because their license fee is for 50 million and their retained profit is only 12 million. But on the other hand, this retained profit is something internal to the business. They will not have to pay any additional cost in forms of interest when they're using this source of finance. So this can easily cover up your 4 marks. And when we're talking about an external source of finance, we can say that suppose the ES could go and borrow money from a bank. Banks will easily be willing to give them a loan because they have good reputation in market. They have been established for 25 years. However, with the amount of money that they get in form of loan, there will be cost of borrowing attached to it, so they have to pay interest on that, and as a result that will increase their expenses, which will decrease their profitability. So we can give an explanation for both of these. Now moving on to part D, evaluate how two external stakeholders of ES might be affected by the company continuing to use the fracking process. Now the question is specifically asking for two external stakeholders. In the data there was an extract which kind of mentioned many things that were people were being affected by. They were not liking the fracking process because they felt that it is causing their real estate values to go down. There were also pollution related concerns, wildlife related concerns. So society is a major external stakeholder. So the extract mentioned that fracking is not liked by everyone. So we can see that society or the local community is a major external stakeholder, and they're not really liking the process of fracking or what the ES is doing. And their main concern was that it has caused their house prices to decrease. It is bringing the real estate values down in those particular areas. There were also pollution related concerns, and there was also wildlife being lost. However, the same local community will be benefiting from cheaper gas prices. So because, and that is something that because the local community is using gas as an energy source and they will be paying for it, so the lower the prices the better for them. So we will be giving both aspects of how this will be affecting the external stakeholder. So one stakeholder that we can talk about over here is the local community. And like we mentioned, that local community will be affected. It has concerns over the real estate values, pollution concerns, wildlife concerns. However, that same local community will also be benefiting from cheaper gas prices. Another external stakeholder group that we can talk about is definitely the government. Now, the government is an important external stakeholder group, and they will be interested in what ES is doing, because obviously ES is providing a source of employment, and ES is also paying taxes for them. So the when ES is growing, so that will actually be good for the government, because government will also benefit from that. However, the loss of wildlife and the pollution that is being caused because of the fracking process, that can in long run affect the government, because it will be the government that has to spend and try to protect the nature and the wildlife in those particular areas. And it can also be uh, politically uh, a, a type of political reason that might affect the government for their future elections. So these are the points that we can use to answer this 11 marker. And again, whatever information that we're giving, we need to present the other side of the picture too. So like we said, that when ES grows in size, ES is successfully doing business, the government is benefiting from additional jobs that ES is creating, the government is benefiting from the taxes that ES will be paying, but at the same time the government will also be affected negatively because of the pollution and the wildlife loss that the ES operations may be causing. So we need to mention both sides of the picture to develop a good answer. So guys, I'll end this over here, and hopefully I'll see you soon in another video. Please do like and subscribe to my channel, and also please mention your request or any comments or any specific paper or question that you would like me to do for business studies A level. Thanks for watching. Goodbye.